There's blood in the streets today. S&P's down 3%. Nasdaq is down over 4%. And the Dow down 2%. We're going to be taking a look at the indexes. We're going to be taking a look at some long-term charts. We're going to be taking a look at where we might think we see some big technical breaks, looking to get to the short side. Right now, we're going to take a look at where we're looking to get on the long side. We're going to look at the DXY today. We're going to look at gold, which is closing about uneven today. Silver down 1%. And we're also going to give some important feedback on Bitcoin, when you should expect possibly the next move up, and what you should expect is the next move, whether that's down or up. We're going to do that all right here, right now. Let's get to it. If you're new here, welcome. And if you're not, welcome back. Looking forward to this session with you. Now, everyone should have a pretty grounded view right of now what's going on with the indexes, right? No one feeling any type of fear. Everyone knows that right now we are waiting, we are watching, we are going to pick our spot, and there's no need to until we get that clarity to take a position. That clarity is not there just yet. You could see right now that we are actually trading at 33, 34. This is the exact point in the first week of August that I got neutral and I said, we've reached our take profits, and now I think it warrants being out of the market. What a volatile 2 weeks it's been since, as we traded up 8% or 9% and then down to that 8 or 9% to where we are back where we started. However, right now, things are looking a lot more attractive. Why do I say that? You could see that we're towards the bottom of this range over here. This is an opportunity, if we resume off this range, to get long here on the equity markets after seeing this big retrace, to give some type of perspective of how big that retrace is that we're experiencing. It's about 7% right now, a little bit lower off the all-time high. You could see since the March low, we've had three other significant pullbacks of 6%, 7%, again, almost 7%. And here we are again, about 7%. This is when the equity markets become attractive. You could see over here, this is our prime trend line. The one's got the bluish tint to it. And why we are above it, this is extraordinary bullish. I do notice that if you look at the fear index, the greed index, it's about 50-50. So I'm not seeing people really capitulating here. I'm seeing a lot of people actually capitulated up here at the top. A lot of people who were short. This is where they finally gave up into the resistance. Right now, everyone is pretty neutral. We could go either way. If we get any big technical breaks, we are going to be there to attack to the downside. As that develops, I will let you know how that plays out. By the way, for some perspective over here, this is comparing the Dow back in 1929, right? And then now in blue. And you could see, right? You could see they are kind of putting in a similar pattern. Now we almost made a higher high here. We didn't quite yet. This high, we didn't make it as far on this time. This is just so far a normal pullback. This is nothing more than fun to look at this chart and this comparison, and we will continue to monitor it. However, the one thing and the reason that I bring this up for you right now is because if we get a technical break, we don't play that breakout. If we get a technical break, I'll show you what that looks like and what that is. This is the move that we look to sell into. This is the move that we look to sell into, not the initial breakdown. It's the rally up. That's the move we look to get into. What would that look like over here? This is, first of all, why we remain above this, and we're going to look to lean into any touches over here. Any touches into this trend line. This trend line is coming in right now at 32.92. At 32.92, this trend line is coming in right now for the next session. Any touches into there and a resumption off, that's a place to lean into, because the risk to reward becomes very attractive at that point. Very attractive at that point. Now, we could lose this level, right? You could see over here, by the way, where we peaked down below. Let me show you this really. Let me just move that down over here. Do you see these 2 points I'm touching? This one Now this one, look, see this one over here? If I move this trend line back, you're going to see a touch to that. There we go. You're going to see a touch to that trend line as well. See, I'm touching now this trend line, this peak over here, this peak over here, this peak over here. Is it possible that we lose this trend line over here and come into this horizontal support? Horizontal support always carries more weight. This horizontal support coming in at 30 to 32. And would it also be, like I just showed you over here, would it also be connecting this trend line down over here? You see that touch, this touch over here? Yeah, that's possible. It's not until we lose this support over here at 32 that we would consider this to be a technical break where we would be watching to take part in the downside. We're already off. You're already off 8% right now, 7%. Now's the time to lean in as we come into this area of support. Have that situational awareness. Do you have to take the first break up? No, you don't have to. It's a good one. If we come all the way into the trend line though, that's something to watch for an entry. I'll be watching it. I'll help you through it. I want to take a look at some other things with you. Starting, this was shared by Gabriel. Gabriel shared in the CTM Telegram group. He shared this channel over here. This is right a 12-year channel showing the resistance over here, the upper resistance. This is where we broke above, and then I uploaded a video and saying this is a potential game changer. You see how we broke above that channel? And I said the next 24 hours were crucial to see if we fell back in, we're able to resume off of it. Well, we fell back in, and so far we fell back in, and we fell back in pretty hard. We're currently trading right over here where my mouse is at 33.35. Right over here, 33.35. Okay, right where the magnifying glass is right there. Now, just because we fell back into the channel, do you think that means that we're going to see a touchdown to here? Well, I don't think that at all. This is, by the way, what's going on right now is much different than what was going on in early, mid, and late February. Why do I say that? Well, in mid-February, right, we were already having a dollar shortage. That started back in September when the Fed had to start their repo actions. Right? They were supposed to stop by the end of December. That still was continuing into February. We had those problems already in the market. Then when all of a sudden we're having this developing pandemic that was an absolutely unknown, right? Every country went down to lockdown, right? How does the market react in unknown situations? Well, it did exactly what it should do, right? But then the Fed stepped in. Do I think that just because we fell back into this channel, that means that we're coming back now towards the bottom part? No, I don't think that. I don't think, but God, if we break below that channel, then who knows what we're looking at? That would be really worrisome. I think over here you have this midline, this touch point he has it marked, this dotted blue line over here. That you could see is coming in right now, I would say around, let's call it 2950. Let's look at 2950 here. You see this line over here? Let me highlight this line over here. I don't need to have it bright right now because it's not into play. Oh, that was the wrong one. 1 second over here. This line over here. This 2950. Let me highlight it. I have it at 2947. Okay? That's very important support. Very important support. If we lose that line, then that's when we're really going to be looking to go ahead and at least test 2300, possibly 2300, and possibly then break down outside of that channel. That would look like a breakdown of over here. We're not even close to there yet. We're just giving some deeper perspective today of what we're looking at. We're focused right over here right now. By the way, this support could hold. We might not come down and touch this trend line. This is all in play right now. If we do not touch this trend line, I think you should remain neutral and on the sidelines. Continue to wait. Even though, as I said earlier, we could get a big move up, that's not the move to take. All right? Right now, things are still, let's call them sketchy. All right? Let's wait for clarity. Clarity's not there right now. Clarity's not, anyone who's seeing the market clear right now, they're lying to you. Of course, you have the perma bears who have been this whole time shorting the market, right? What happens with perma bears? Well, they're wrong 90% of the time. And then the 10% of the time that they got things going their way, they're really loud. Calling a top here is not what I do over here. This is a bullish market. The bullish structure is still in place. If it breaks down, we'll be there. We'll be there to take the downside of the market. Gold today, you could see this is all you need to focus in on gold. If you watch the live stream today, you have this really strong awareness. We're watching this descending triangle. We bounced off it this morning. We bounced off the base this morning, right? There's your guideline. There's your guideline. Gold's trade closing unchanged on the day with a strong dollar today. Dollar's up almost 0.5% today. Gold unchanged. All right? Pay attention to signals. Pay attention to signals. So what's going on? If we lose this, though, if we lose 1900, if we break down outside the bottom, I imagine what happens is that we come down right to around that. What is that? 1878. Then we're going to come down, touch there, bounce off there, and then if we don't come back into that channel, into this triangle, and are rejected, then we're going to see a prolonged down move on gold, and we're going to be targeting the 1800 level. I have support in at 1794 and or lower at 1743. We'll watch it together. Silver's looking good as well. Silver's down 1%, but you could see that this was the line that I've had in the sand over here, and above it, silver's bullish, and silver so far is holding up over there. Now, same thing, if we lose this level that's coming in at $25.85, if we lose that, yeah, then we could see a bigger pullback. First to 24.50 and then 23.33. Those are the levels to watch on silver. Both of those places will be places to lean into. We are in a bull market in the precious metals. That's going to continue. Listen, there's one thing different. People are focused in what happened over here. This is fresh in everyone's memory. What happened over here? Do you remember that gold came off 15% when that happened? Do you remember that silver came off 30%? What did Bitcoin come off, like 60%? Do you remember? But there was one major difference. There was one major difference. Let me show you what that difference was. We were in the midst of a dollar shortage. It was a dollar crisis. What happened? The Fed inflated their balance sheet by $4.1 trillion. They opened up direct swap lines to different central banks across the world. Those swap lines are being paid back and have continued to be paid back. There's no longer a dollar shortage in the system. Those lines are still open if they need them. There's a big difference between the crisis that we experienced late February into March and then what's going on today. Okay? Be aware. But what is the same, pay attention to signal, not noise, is that the only option, the Fed has two options. The Fed could either go to a deflationary depression, or they could continue to try to inflate their way out and print more. They're going to go with the easy option. They're going to print more. Every single politician is going to go ahead and they're going to dig deeper deficit, spending more money, which is inflationary. And that's the direction we're headed. That's going to be the policy response. Yeah, right now there's politics being played, but the election is only a couple months away. The election is only the market's forward looking. It's coming one way or another. And don't forget, the Treasury is sitting right now on $1.8 trillion. Some of that money is going to be deployed. Wait for it, watch for it. It's coming. The dollar, we're actively watching on the dollar, but there's nothing to say today. There's nothing to say in the fact that if you really want a really clear analysis of the dollar, watch the live stream from this morning where we looked at the dollar in the very beginning. It's very important. But we're right now coming into that resistance here at 93.50. We haven't yet had a pullback, right? And then a resumption off where we would be looking for that counter trend move. Most importantly, on Thursday is the ECB. Thursday is the ECB. The dollar index, the DXY, is heavily weighted towards the euro. We have to see what type of reaction we get off there. Right now, what I'm paying attention to is with the DXY up on the day pretty firmly, you're seeing gold now turning positive. All right? Now turning positive. It's break even on the day. Bitcoin, however, trading right now at $10,000 is within this blue box over here. I want to give some direction on Bitcoin. And when I say that, first look at this. You could see over here, this is looking at the past 9 years of Bitcoin. You could see that September is notoriously a down month. Now I have a price projection of about $18,000 at the end of 2020, right? That's getting close, right? We're just a few months away. However, if you think that is ridiculous, Bitcoin trading at $10,000, look what happens. The average return in October is 31%. November, 63%. So it seems more than reasonable actually now, doesn't it? That's where I think we're going to be at the end of the year in December, right around $18,000. And Bitcoin right now from where it is today, it's in this blue box. It could go either way. I have no idea if it breaks up or down outside of this blue box. It's a coin toss. It's 50-50 either way. But what I do know, if we come down into this area over here, right? This is the breakout of the bull market, this trend line. This is actually the triangle that we were in, and we never, if you have a zoom out, this is that prime trend line. This was the crisis. If we never had that dollar crisis, I don't think we ever broke down outside of this trend line. We did. I do think it holds now. I think that if we break down outside of this blue box, we close the CME gap. The CME gap is coming in at 96. Hold on. Let me pull that up for you just to get a confirmation. Let me pull up the futures, and then we'll look over here. That is coming in right there. Closing that gap would be 96.50. 96.50 closes the gap. So if we break down over here, I think that we're going to be able to close that gap. All right. So not only that, if we go down even further, we have the support, the trend line support is coming in right now over here at 93.75. And then the lower upward sloping trend line support is coming up at 91, let's call it 80. So in this area over here, right, look, that might be a spike. Price might wick pretty quickly down over there. There's a lot of supply. We were in a 2-month consolidation over here. There's a lot of supply down over there. If I were to draw, I'll just push this one down for you just so you could see. I want you to see as I come down over here, I'm looking over there at that resistance, that support, that resistance. That line is coming in at 92. Okay? That's the line to focus in on. I think you should have some orders waiting down over there. If we do wick down over there, I don't know that we get there or not. Again, that's 50-50. This is the look around the markets. Let's take a look at the Nasdaq down over 4% though. But what I want you to see is that the Nasdaq is down into this area right now of support. It's got horizontal support coming in right over here. It's at $11,084. And then you have this trend line support. I'll make it a little bit brighter for you so you could get a good look at it. And then I'll call out the number. That's also coming in right there at 11,063. We're in an area of support over here. This is where you're looking for price to hold and resume up. By the way, if you look at over here, we've talked about, and I've been letting you know, the Swiss National Bank is printing money and buying U.S. stocks. They now own 583,000 shares of Tesla. Absolutely ridiculous, right? But that's not all, right? Of Apple, they own 17 million shares. Microsoft, almost 29 million. Amazon, 1.6 million. Google, 1.2 million. Facebook, almost 10 million. They print money and they buy U.S. stocks. Do you think that is not going to continue? We got some nice perspective for you. We're going to keep monitoring this. Right now, you should feel safe because this is a very uncertain time. You should feel, when I say uncertain, the DXY is on the verge of breaking out here, and that could put up a decent sized counter trend move, right? We're seeing gold at a very precarious place where it could lose a level and break down. Same thing with silver, and they could just as easily break out to the upside. We have come to a point in the market where we're at an inflection point. No one should have clarity. But no one should be looking as you come into support and just assume that we're going to keep going. If we get the technical break, we wait for the bounce, and then we look to attack, we'll be there. We'll be there to take it if that's what happens right now. I'm looking. By the way, everyone is in an uptrend. Everyone is late to get in and they're quick to get out. You got to ride those trends. You got to ride those trends. All right, everyone, I look forward to seeing you all in the morning. If you're still here and you enjoyed this video and you're new, please go ahead and subscribe. And if you're not, make sure you smash that like button. Thanks, everyone. I'll talk to you later.